So is this the start of the mother of all short squeezes? That is the big question. I personally do not think it is, but that is honestly a bullish thing. We don't want the short squeeze to start necessarily at the bottom. We want this to start when we were already at high prices. So let me know down below in the comment section if you think the AMC mother of all short squeezes is starting right now. Let me know your guys' opinion on that. But we're going to be talking about exactly what is going on in today's move. Briefly, we have already talked about that in another video, so I don't want to take too much time on that. We're going to be talking about how long a typical short squeeze does last and my price predictions throughout the rest of this week. I honestly think $60, $70, even $80 is not off of the table, but we're going to talk about it. So drop that like on the video, comment down below, subscribe to the channel, turn on that notification bell. Also, check out the 3 links linked down below in the description. There's a free Discord chat down there, a link for public. You guys already know the deal with that by now. There is also a link for the buy and sell alerts. We just hit a massive trade on Wynn Resorts yesterday, playing my same theory that I thought was going to play out with AMC. So let's get into it, guys. Like the video, all that good stuff. So subscribe to the channel. Now, first and foremost, what is going on with AMC? Yes, some small shorts may be covering on their positions if they did not have the extra money or liquidity to come up with to stay in their positions for their margin requirements. Yes, that is very possible. But the bigger majority of what is going on is obviously because of the Vaxi was FDA approved. A lot of investors and ultimately trading algorithms believe this will cause an increase in demand for a lot of leisure activities. As we do know, AMC is a leisure activity. Cruise lines have been up. Basically, all recovery stocks have been up because of this. So it is really coming down to trading algorithms that are boosting up the bids of the bids and the ask of these recovery stocks. So that is really why AMC is going up so much. But on the other hand of this, you are seeing a bit of a gamma squeeze activity, 104,000 calls that are currently in the money. That amounts to about 10,000 shares that do have to be bought by the market makers. But on top of that, you're seeing FOMO buyers, a big group of FOMO buyers, day traders, swing traders, and even hedge funds and institutions going long on AMC stock. So definitely a lot is playing into this, but it's not the shorts that are covering in this scope of what you would think. Not the big money, the guys with tens of billions of dollars of assets under management. They are not covering on their short positions whatsoever. We're not seeing that reflected in Ortex data. Keep in mind, it will take about 2 days to get that information reflected. Still at 17.76% short interest and 90.84 million shares that do need to be bought back. So still looking very bullish right there. But let's continue on. Let's go to the whole short squeeze situation. Now, typical short squeezes last from about 1 to 4 days. And before that, you usually see a run-up of about 31 days. So if you usually see a run-up of about 31 days, beforehand, we've been roughly seeing this run up since August 11th when we did hit this low at about $30. We've pretty much been going up ever since, only about 2 red days since then. So that would put us at about 14 days into this rally. Now, obviously, AMC is a little bit different from even GameStop and ultimately any other short squeeze that we have ever seen. So it's a little bit different here. Maybe it's going to be a little bit less days, but nevertheless, you're still going to see this run-up period. You're going to see, obviously, a huge price action in the stock once the short squeeze does happen. And then typically, once that short squeeze does happen, like I said, you only have about 4 days of squeezing. So once we do get up to these prices, and keep in mind what people's price predictions are. I've seen $500, I've seen $200, I've seen $1,000, I've seen $100,000, $1 million. We have all seen these price predictions. If a typical short squeeze, a big short squeeze, Volkswagen and GameStop only lasted 4 days the first time around, then you need to see AMC get up to multi-$100 price points before we do start to short squeeze, which is very possible. Don't get me wrong, guys. Just trading algorithms and FOMO buying can be a very powerful thing. Do not underestimate that. Far as my personal opinions, I'm obviously not a financial advisor, so take this information with a grain of salt. It's only my opinions. I'm not asking you to believe them or to not believe them. But this candle right here, this move that we did see today, looks very reminiscent to what we did see back here. So if we do, let's just count this, right? Let's imagine for a second that this is that candle. We did move up quite a lot during this period right here, but you say 1, 2 more big days. So that would roughly put us in between about $60 and $70. I think that is very possible by the end of the week, especially if we do have another monstrous day tomorrow and Thursday and Friday. Ultimately, that will be the biggest thing. If we do have good days Thursday and Friday, that will tell us a lot heading into next week. So I do think we are very close to actually seeing the mother of all short squeezes. I think in between, in my personal opinions, September and October are going to be very big because, as we do know, we have the margin call starting on September 1st. And then even bigger than that, on October 1st, you're seeing the bank's reserve requirement ratios are going up in between about 5 and 10%, or on the lower end about 3%, on the higher end about 10% for different banks depending on their risk levels. So what is going to happen then is the banks, they can't just cough up this money. They have to go to their biggest clients and tell them, hey, we have higher reserve requirement ratios. You have higher reserve requirement ratios. You have to put more money up. And what's going to happen, the hedge funds institutions are going to put that money up, but at the same time, they're going to have to de-risk their portfolios. And AMC is obviously a very risky position in those hedge funds and institutions portfolio. So they're going to have to ultimately cover on some of their short positions. I would imagine it would be AMC, because obviously shorts are very over leveraged on AMC, and then ultimately take that money back to the banks. But in the meantime, obviously covering on those short positions, causing AMC stock to go to the moon. And there's going to be a flood to cover on their short positions, because as they do start to cover, more people will have to cover behind them, but the price will be going up, making it more expensive to cover on those short positions. So that is ultimately my opinions here, guys. We can continue to see a gamma squeeze here if more people continue to buy calls that are just out of the money or even in the money, but I would not bag on that. Everything else we have been talking about in this video is a bigger indicator for me personally. So drop that like on the video, comment down below, subscribe to the channel, all that good stuff. Check out the links linked down below in the description like we already did talk about. But that is all for this video. I will see you guys in the next one.